There it is.
Today, we have a topic about tax. Wanted to dive into this because there's going to be a lot of these, and let's give it its due recognition.
What's the background for this?
This is a
Yeah.
regulation about taxing NFTs in Pennsylvania at the state level. So I actually want to find the law. So actually here we searched for a half hour and found nothing on any of the websites because they suck and Pennsylvania doesn't publish their own statutes. All right, let's read this webpage. So it's not authoritative, but we can see at least what it thinks it says. So this is a webpage from the Pennsylvania Department of Revenue talking about non-fungible tokens. A non-fungible token, or NFT, is a unique set of software codes recorded on a blockchain. I disagree with that, but that's one way you can record it, which is used to certify authenticity and ownership of a digital representation of something of value that can be bought, sold, and traded. Also not necessarily true, because maybe some of them can be bought, sold, and traded. Software codes recorded on a blockchain certify authenticity and ownership of a digital representation of something of value. If you have a valuable handbag with a digital certificate of authenticity recorded as an NFT, for example, Breitling watches, client of a client. So you buy a Breitling watch, you get an NFT. Is that meeting this definition? Is it a set of software codes recorded on a blockchain? Yes. Is it used to certify authenticity and ownership? Yes. Of the digital representation of something of value? Is it the digital watch? Authenticity and ownership of the watch itself? What can be represented by an NFT? The following provides examples. Non-exhaustive list. Digital artwork, sports cards, memes, digital equivalents of tangible personal property, including not limited to video, photo, games, music. Rights to products or services such as concert tickets, membership to a club. So it's not the concert ticket itself, it's a right to the concert ticket. Concert tickets can be NFT themselves. Concert tickets are already getting produced as NFTs. Donations to causes such as partial ownership of the Amazon rainforest. Very specific there. What determines the taxability of an NFT for sales and use tax purposes? A sale at retail involving the transfer of ownership or right to use an NFT that represents taxable, tangible, personal property. So if you have physical property is this like a custodial ability to get the underlying thing? Or grants ownership to use something, so that's like a ticket. If the NFT is not a digital good, or is intended to grant ownership or use of a non-taxable product, like clothing, the sale at retail of the transfer of ownership or right to use an NFT is not taxable. If the NFT is not a digital good, or, so there's an or that's good, is intended to grant ownership of use of a clothing, the sale at retail of the transfer is not taxable. According to this sentence here, if you have an NFT and the purpose of that NFT is to allow somebody to use your clothing in Pennsylvania, then this NFT is not taxable. It doesn't make any mention of the relative value of the NFT versus the clothing. So if I have a sock and I say that your ownership of the NFT allows you to use the sock, then according to the sentence, that transfer is not taxable.
Right. It doesn't give any information about what it means by purpose.
That's interesting.
Well, actually, it doesn't say anything about what the purpose or intent is. If it's just about what it grants ownership to, then you just add a sock to every NFT and you can be tax-free all day.
Maybe this is the Uniswap lobby. But you can redeem them for socks. Does this mean that all of your NFT drops should be originating in Pennsylvania? If the sale of an NFT includes both taxable and non-taxable components, the entire sale amount is subject to sales tax, unless the non-taxable components are separately stated and identified. Where is the sale of an NFT sourced for sales and use tax purposes? Sales of NFTs are sourced to Pennsylvania. This is a nexis issue. If the purchaser is located in Pennsylvania. If the billing address is an invoice for an NFT purchase is in Pennsylvania address, then it's presumed that the purchase occurred in Pennsylvania. What are the record-keeping requirements? The seller is required to prepare and maintain records that allow the department to ascertain the seller's compliance with the tax code, documenting the amount of taxable and non-taxable sales, the amount collected, describing the item sold. An exemption certificate is required to support non-tax sale of tangible physical property or taxable services unless the other records document that the property sold is not subject to tax. If you're selling clothing, which is tax exempt, you must have documentation, an exemption certificate. But if your NFT grants use of the clothing, you do not need an exemption certificate. Or maybe you do, but that's not mentioned here.
I'm hung up on the last paragraph in the what determines tax liability, because it says if the sale includes both taxable and non-taxable components, then the entire sale is subject to tax.
This is recursive logic here because it says above that the NFT is not taxable. It says right here, NFT is not taxable. How is the purchase price of an NFT determined for sales and use tax? The purchase price is the consideration received by the seller. If the seller received cryptocurrency in exchange, the value must be converted to dollars at the time of sale. Consideration received by the seller is very different than the dollar value of the cryptocurrency at the time of sale.
Yeah.
Are royalties generated from subsequent sales of an NFT by third parties subject to sales and use tax? Since a royalty, in quotes, paid by a party other than the purchaser does not convey ownership of the NFT or a right to use the NFT as defined in the tax reform code, the payment of royalties generated are not subject to sales and use tax. What are the sales tax collection obligations of a marketplace facilitator that sells NFTs? Marketplace facilitators who maintain a place of business in Pennsylvania, including have an economic presence, must register, collect, and remit PA sales tax. So you need to have more than 100,000 in gross sales in the Commonwealth. What is the effective date? And they're not looking at retroactive enforcement before May 2022. Okay, so let's apply some of these ideas to an actual concrete example. So Sue Squares. Sue Squares are a bunch of NFTs that were for sale since 2018, and a lot of them sold before May 2022, which is great. The way that these sales are described in this document don't really line up with how the sales actually happened for Sue Squares. Maybe these squares are intended to provide access to a pair of socks that I have. There are a couple caveats here, which may or may not be cop-outs in this law for sales tax purposes. And really just, they make the law not even make sense. All of the Sue Squares were minted during the first block. In fact, this was one of the major features of Sue Squares, demonstrating that you could mint 10,000 NFTs at once. This is actually a really novel thing. It was the first time this was ever done before. It's a major feature of the Sue Squares smart contract. And the 10,000 squares were minted by the Sue Squares smart contract to itself. So the smart contract at time of deployment created 10,000 squares, minted them, and gave them to itself, all in one transaction. And then after that, the smart contract, which is in Pennsylvania, not in Pennsylvania, in the ether, it is something that runs on its own accord without any direction from anybody, will sell the squares. This sale can be looked at two different ways. One, it can be looked at as a transfer from the smart contract itself of a thing that already exists to the buyer. Or if you look at the button on the website, which you can't because it's on with MetaMask, when you click the button, it says mint. So from the perspective of the website, you are creating the NFT. So is that creation a service or is it a sale? I don't know. Is it actually transferred though? Is it minting a transfer? Is it creation a transfer? Is it creation a transfer if it's created by an automatic existing thing? Or does creation only happen if a human creates it and gives it to someone else? Is it more like a royalty? can it be said that the smart contract makes the token, gives it to itself, and then sells it? Maybe that's not a transfer. Maybe that is a secondary transfer. Is it a marketplace? I don't think so. I don't know.
Well, it might go back to that sale for resale. Like when the Sioux Squares contract minted to itself, the intention is to sell them. It's weird that they have this commentary that doesn't have clear references to actual laws.
For sure.
Hi, William. I had a question about the tax implications. Like when you're a market or when you're considered a market, does that mean you have to collect enough information to be able to supply the tax forms to like the people that use your service, or like I guess have the KYC there in place to be able to even do that?
I think so. These were limits of like $100,000 of revenue in the state is what makes you liable.
I guess the revenue that you generate is off like on a yearly basis is really what governs if you have to go these routes, correct?
Yes.
Like if you're a small time business or like a really I guess a startup market, you don't have to necessarily follow these until you reach that bracket.
So based on what I saw, the marketplace itself, if you're a marketplace and you're not doing $100,000 of sales in PA, then you do not need to register in PA. And I believe a lot of states have a similar threshold.
Yeah, the only, I guess the confusion that I got from that is like, is there kind of like a double taxation happening here where like you own a physical item, but then you also have the digital representation that in itself might have separate value just based on the scarcity of it, right?
Well, I think they have to do with the consideration. So if you buy the shoe and you pay X for it, the X is the receipt amount is what they want to charge the sales tax on.
Yeah.
So the NFT could be worth $1 million, but they only charge you 100, and so the 100 is what they want the tax on.
Yeah, until of course you decide to sell that NFT, then you get taxed twice.
I don't think that applies here on the sales tax. At that point, that's a resale, but you're going to have some income tax for sure.
Yeah, that makes sense.